Hey, it's Mack with PriceActionTradingSystem.com. It's Thursday. It's October the 16th. This will be our chart lesson for today. And just more of the same today. It was all uphill today. We didn't get the afternoon sell-off that we've been getting, seems like lately. Actually, no, there's only about 10 minutes left in the day. And if you'll notice, this is a 4,000 tick chart. And I'm doing this kind of to experiment with this. It doesn't really make it any easier as far as how big your stops have to be or how big your target needs to be. You still can't hardly use a 2 point stop with going to this 4,000 tick chart, but what it does do is it slows down the speed of it a little bit, and there's less bars, there's less entries, and this is the entire day on a 4,000 tick chart. Now let me show you the 2,000 tick chart, and you can see there's a lot more bars here. Um, you still see the same there's I'm gonna go back to the 4,000 tick chart, but notice this two-tiered channel working higher. We had a break here, a couple legs to a new high, and then we had a pretty good correction. Then it moved up again. So all of this is still following the rules that we normally would see. But let me show you again the 4,000 tick chart. There's the 4,000 tick chart, and notice the blue channel in there. But then there's also the larger, bigger channel. This is a bigger chart, so you find a little larger pattern, and I'm sure you can find this same pattern on the 2000 chart, but I started watching this one just to see. I like the fact that it slowed it down a little bit. It still pretty much gives you a lot of the same setups, except there's not as many failures and all. So I'm going to go through this 4,000 tick chart and show you that the same things are there on this level that you see on any level. And the only problem is you got to use a little bigger stop because you can't get above the signal bar, below the signal bar, and stay within your 2 point, our 2 point margin. But you can't do that on the smaller chart either, really. So, I'm not telling you to watch both charts, so don't misunderstand what we're doing here. Only reason, and I've never done this either. I've never really had to, but I just wanted to. Somebody actually sent me. I'll give this gentleman. Let me find his email, and here's what he sent me. He says, Mac, I've been charting the 2,000 tick daily bar count for over the last 6 weeks. 6 weeks ago, it was too slow. I started keeping track so I could come up with an average count. I've been using 3,000 tick charts since the bar count has been over 300, and today a 4,000 tick chart, and was looking for 2 point trades with the bigger bars. It has been working great. Thanks for all your hard work. And then he put his name there. So that got me to thinking, and I've been suggesting to do this, but I haven't done it myself. Um, once you get more experience, you don't necessarily have to slow this down. But the one thing I was noticing a lot of were these whipsaws on the smaller chart. And by going to this 4,000 tick chart, I think you reduce some of that to a degree. But the key is still just understanding what's going on and finding these bigger patterns and making sure you're on the right side. Once you come off this low, you're going to the upper side. And then once you come off the high, you're generally going to the other side. Now there's a midline in here, and this time we tried to get below it but got back, and then we got a little further below it and we came back, and this time we came all the way down. And so it was building. Each time we came off the high, it went a little further to the low side. And so what I'm going to do today, I'll leave both of these on there. Hopefully it's not too confusing, and we'll back out and we'll talk about the trades. And I'll just show you how this stuff works exactly the same. It doesn't matter what size chart you're on. The only change is going to change. I mean, you could go to a 5,000 or 8,000. You might be waiting a little long, but it doesn't really take much longer for a 4,000 tick bar to work right now than it used to a 2,000 tick. Now 2,000 ticks are going by in a blink now, and so you don't have enough time to think if you're not real experienced at this. So this could help you in that sense. So, but let's talk about the trades, and you'll see the same stuff we see on the 2,000 tick chart. Um, you just got to have a little bigger stop to do, but what I suggest and what I was doing was whatever my stop was, If my like let's say our normal rule is 2 points or 8 ticks. So we don't want to have a stop any bigger than that. So let's say you have to go from a 2 point. Let's say you want to enter short right here, and in order to get above here, you got to use 3 point stop. Well, take that extra point and add that to your target, and you see you would have gotten that easily. And you might even add more. You just don't want to, try to go for so much that you shoot yourself in the foot, so to speak. And to be honest, I really don't know what the right answer is, other than just looking at the volatility and seeing what the average move can do right now. And most of these average moves, I mean, this move right here is probably an average move. If you look, they're moving about that far each time on the smaller moves, and then you're getting some bigger moves thrown in there with it. So, um, but that's my suggestion. Just go to a bigger chart and use a little, you put your stops where they go. If you're going short here, it has to go above the signal bar, which is up here. If you're getting long here, it has to go below the swing low or signal bar, which is right there. And this may not actually be the signal bar, but that is the low of the swing, so that's where your stop has to go. And notice prices never come, they try to come back, but they never get back there. Here's the low of this one, so your stop has to go right here. Let's just to get an idea. If your stop went below this one, that would be 82.50. If you're one tick above and you see, it's 86. Actually, that's a little much. 82.75 is your trigger on that one with a stop. So 82.75, 22.75. So that's a 3 point. So that it takes an extra point to get your stop where it needs to be. So put that extra point on this side. I mean, you got, instead of getting a scalp for 1 point, you're going to go for 2. So that means if the entry was 82.75, or I'm sorry, 1825.75, I'm looking at the number and saying something totally different. A little dyslexic acting there, but 1825.75, and so to get 3 points, you got to go to 28.75. So we're going higher, and you see that's right there. And you got a long way to go there. On these average moves here, they're getting, let's just see, on these average smaller moves, I should say, 40 1/4 to the high. So that's a 3 point move. These are basically, these little smaller moves are about 3 to 3.5 point moves. So you want to probably work within those parameters. So you don't want to go probably for more than 3 points, because you may, it may back up and take you out after you watched yourself get 3 points in your little money can. So as I like to call it. So hopefully that makes sense. And make sure, don't try watching multiple charts. Most of you know that I don't really believe in that. I think it would distract you. There's some people that do that and swear by it, but I just think it's distracting, and I don't think it's necessary. I don't think you need it to make money. And so I usually tell people, don't try to go back and forth between the charts. I was going back and forth a little bit after as I was just watching it, because I was trying to see, just how much difference there was. So, and you probably want to do all this on the simulator first. Don't just jump into live trading and do any of this. But let's talk about the chart. Early on, there was a clear two-tiered channel coming down. This is on the 4,000 tick chart. And so you're working down. This is the first real break. There's a little bit of a close outside. I don't know how, if you want to count that one. But you get a break here. Maybe it was good because we made a new low and then we reversed. But you're probably going to get one more shot at it right here. So and this is a second entry short. It's not a perfect signal bar, but you're not getting a lot of perfect signal bars. It's just amazing how many of them have a little stem on it or whatever. So this is one. Let it break lower and use the limit order. And you see, that's what a lot of people are doing, because it'll break one tick lower than this bar right here, and it shoots back real quick. And it may do it 2 or 3 times before it finally takes on off. The market's just really thin. There's not a lot of volume. And I've watched it do that many times all day today. So it's just part of it, it seems like. So I wouldn't say ignore. Make sure you still get a pretty decent signal bar. However, ignore some of the craziness. Make sure you're following the rules more than you're looking at the bars, is what I'm trying to say, because you might get tricked into trying to go along here when the price action is telling us in the rules that we're probably going to get one more push to the low side. So you get one leg up, first entry, pull back, second entry right there. Again, when it breaks lower there, this is not a very good signal bar, so this one's marked it in green. But even if you use a stop there, it worked. You probably had to ride it back, but as long as your safety stop was where it was supposed to be, you never even got close to it. It may make you a little nervous when it's running back up here real fast after coming down here, but I've watched it do that all day and then continue to go on down or go on up wherever it's trying to go to. Um, so don't pay as much attention to that, because that's just, the market's really volatile, really spooky right now. Everybody's spooked, and you can be headed down and then suddenly look at that route. It's just crazy. And that one move right there from the low, so that thing went from 27.75 to 52.75. That's a 25-point move in one leg. I mean, it's just unheard of. The last time I remember it being this volatile and this fast with this much volume was during the big bear market we had back in late 2000s, 2008 or so. But I still don't remember getting moves like that to the opposite side. Most of them are all to the downside. So it's just a odd market right now. And somebody else sent me an article this morning that was talking about it. They were talking about the reason the moves are so big is the volume. I mean, there's the contracts are so thin. There's not a lot of contracts, and what it is, it's just so spooky. Usually the ES is real slow and methodical, and so you have time for a lot of contracts to build up at these important places, but you don't have time now. It's just not enough time, and people are probably scared of it and staying out, so there's not as much trading. And I think the buying has dried up because we've been selling off, so people are leery about buying. And so some of these moves to the downside can be horrific. But at the same time, when people realize it's about to reverse, it can be just as strong or crazy back in the other direction. And my guess is there wasn't a lot of there must have been a lot of volume coming down, because look how choppy it was taking a while to beat it down. And then once they figured out it was at a good point or a good buying point, or the selling dried up, then it rockets in the other direction. So it's just a little different market right now. So keep that in mind. Okay, we're 13 minutes into this and we haven't even talked about but one trade. But anyway, your first trade, and it's a little aggressive because it's not a very good signal bar, but I just explained, if just let it back up and then put your sell stop right in. And you could have got filled on this all the way to a tick, back end where that last close was. And it might have even went a tick further, but I know you could have gotten filled all the way back to one tick before that close. And that's generally something I look at when I try to buy limit orders, where the close was in the previous bar, and trying to stay inside that close. So that would be inside the stem, in other words, if you're trying to go short to the low side of the stem. If you're trying to go long, it'd be the high side of the stem, like that bar right there. Try to get long into the high side of that stem, not back into the body. Hopefully that makes sense. But anyway, oops, grabbed the wrong thing like usual. But anyway, turned out to be a great short. It took it a minute to get going. But even if you were trying to get 3 points out of this, I mean, this thing was good for 5 or 6 points, maybe more there. And then it bounces right off this line right here. You didn't quite get a new low, and the only reason I like the long here is because you got that little trap. And then, I drew my line right there, and then it tried to go lower again, and it closes right along that line again. So when it broke higher, I like that for a long. Turned out to be a really good trade. Then you pull back and you make a higher low, and again it bounces right off that line. And then you got something going. This really confirms it. Really, you got it confirmed here. But you could consider all that one touch. So when you get this one, and it makes it real bullish. I really like that one. And this one you could have ridden for multiple points. That's the thing. If you get a runner right now from 82.75, if you rode it all the way to the top, 46.75 almost. Of course, you're not going to get all that, but I'm just giving you an idea how far it went. But let's just say you entered right here at 25.75, and you just rode it up here until it started congesting. Let's just say you got out in the middle of that 30, let's just say 39.75. So what was that? 82 to 39, or 25 to 39. I don't know what my deal is. I'm looking at these numbers and seeing them and saying something totally different, so I apologize. But from 25.75 to 39.75. So you see how big a move that is, and it's just a huge move. So there's an opportunity to really ride some of these things. So if you do use runners, you've got a chance to make some money now. But then you get a little pullback, and it pulls back to the midline of the blue. And you may not have had the green, but you could have drawn it. I really found the green once we made this low right here, because then you got 3 touches, and you drag this up, and to the very. You find the midline first where it seemed to fit, and you can see that fitting through there on both sides, right across there. And then you find your equal distance, and you're hoping that's where this goes to. So you can see this green one coming into play. But you really don't get that till it's coming back down. But here, you get this pull back, and you've got an uptrend going, and it's the midline of the blue one, and that one you can definitely have that one there, and you get a pullback, first entry pullback, and there's a second entry long right there. It actually went lower here on my chart and then broke out the upside. Nice move up. And then now it's kind of chopping around and working its way back. It came off that. There's a perfect measured move there. It's working its way back. It was real tempting to go long right here. But you had to be aware of this downward trend line, and it can't get above it. It doesn't get above it till here. So there's really a short there. And I think I meant to actually have that one drawn in green. And there was a trap here, but I didn't like the trap. I liked it better when it tried to go higher again. And you're looking for it to come back over here and see. And now, before everything's closing above the midline. And here we finally got to close below it and turned up and turned back down. So that's another reason I like that one. So make sure you study that, because it's much different than this one. If you're just seeing the blue midline, which is this line right, let me get that out of the way, which is this line running right up through here. Notice how everything is still closed above it until you broke and closed below and then pulled back and then went lower. And you're looking for prices to come here. You don't know that there's a bigger trend line here until you get this bounce. And so then it runs down, and again, you get a huge move. And look at that bearish bar. You really got to go short right below this bar. That's what triggered it. But you could have waited here, but you don't want to. This is one time where one tick may not kill you like it would on the 2,000 tick chart, but it might. So don't waste a tick, or don't chase it too far. You might get away with a tick or so chasing one now, but I'd be careful. I'm more apt to use a limit order because it jumps around so fast that you can get. It's amazing. The best trades, it doesn't come back, but there's been a lot of them that have been good moves that it comes back and fills a limit order. And I think it's just people are nervous, and they're like me. They don't want to be going short way down here, even though they know there's a good chance it may keep going. They're too leery of it, so they use that limit order, and it keeps coming back and hitting it until they finally give up and it takes off or whatever. So keep that in mind. And then you bounce right here. Now this kind of confirmed this line. This was tempting to take, but it's a first entry, and usually you're better off to wait on a second, but you never get a second one on this one. And that's one of the things it can happen. But the reason I still like this one is look how far you've moved away from the EMA, and you hadn't been getting far away from the EMA at all. When you've gotten that far before, every time it's kind of bounced. Here it got a little bit, here it got a little bit. And then this is the furthest it looks like it's gotten, except for maybe this one. And so you figure you got your first break of this trend line, sure thing, and it's bouncing here where you can get this one now, and it really confirms the bigger one. But you got a little bitty bar, and it's a doji, and you're way away from the EMA, so there's a good chance it's coming back here. So this is worth taking the risk, maybe with a smaller. It's a real low risk. and you can get a small stop. You can probably even get within our regular 2-point stop rule. So there's some reasons to like that trade, and man, look at it go. Any runners were easily safe. That's one thing about going to a bigger chart. If you're using runners, there's less odds of them getting stopped out, especially if you were getting in at like the key entry points, which will be these trend lines, that we talk about all the time. Look how every time we've come back to that line, there's been a huge bounce, except here when we didn't keep going higher. And then you would figure something's gonna happen. So, but nice move there. Then it pulls back. You get a first entry. It pulls back. It fails. Turns up. I like going long there on a second entry long. You're looking for another leg here is what I was expecting. We end up going a lot higher than that, but I think it gets pretty close to that on this move right here. You can see that. So you're looking for that measured leg, and you get one move up, and then it tries to go lower again. I didn't like going long above that one or that one because they're not very but when it tried to go lower once again, now you've got a failed second entry short, and that's a reversal bar. I liked it there, and it just takes off. And then it works down. You get a break of a trend line on the first entry, pulls back and bounces right off that line again. Second entry long, and that's your midline on your bigger one now. And you should have that in place for sure now. Second entry long. I didn't like going long here. I thought it should have taken off a little quicker. Still turns out to be a good trade, but this was a nice safe entry here. It's following the rules. Second entry long. And this is a second entry long counting off the low, but it's just not a very good signal bar. It almost closed way down here on its low, closed in the lower half of the bar. I just didn't like entering there. And you've already had a couple of times you've gotten below the EMA, and there's a possible break of this blue channel, and so we could have kept going. We could have turned around and went lower there. So I just didn't like anything up through there. There's reasons you could consider this with maybe a limit order. I don't think you'd have got filled on it. Maybe right back at the top, possibility. But I don't think either one of those are very good setups. Then you're coming off the high, and notice too on the blue one, you've had your break, a couple legs up to a new high, so you're looking for some kind of correction now. And you didn't get back up to the top twice on the blue one, so something's going on. And so but rather than take the first entry short, wait on the second one, and it comes here, and you get a fairly bearish bar coming right off that trend line. It tried to go higher. Notice how everything's closing under the EMA. So I like that one. It shot down pretty quick, and then it pulls back and gives you another one right off. And I really thought we would move to the other side of the green one. So I like this one. It didn't get there, but it still was a good short. So, I mean, you still got an easy scalp out of it, maybe, and you probably got 2 points out of it. I didn't check it for 2 points, so let me check that. $47.25, and it went to basically $44.75. So you got 3 points out of it. So yeah, you could have gotten a little extra if you use the limit order there. If you waited and went short under that one, which you might have done, let's see what it gets then. $46.75, still got 2 points, so you may not have got filled on 2 points. But if you were trying to get more, you might have reconsidered that one. So I wasn't thinking about that. I was marking it like I normally mark the chart, and it was good for an easy scalp, but I forgot we're on this 4,000 tick chart. So you might reconsider, especially going short into that the yellow line there, because as you know, the larger yellow line is today's open, and that generally is an important place where prices will swing to both sides, and notice we're still above that. So that's something to think about there too. Notice early this morning how it was acting as support, then it's acting as resistance, and then it's acting as support. And my guess is, well, no, the market's closed now. So there's some reasons to maybe make this one green after thinking about it. I'm gonna change that one to green. And then you get your break. You get a first entry short. It pulls back, second entry short. But this is not a short you want to go short on. Look, it's closing way up here in the upper third. Uh, I think you got to wait. So there's a failed second entry short, and look at this bullish reversal type bar. It still didn't close on its high, but this is one I liked um, when it broke higher using a limit order. But you could have used a stop if you're going for your regular scalp or whatever. And that's a big bar, so I don't know that you're going to want to do that. So you just about had to use a limit order, and I wouldn't do so with the expectation that it's coming back here because you're still looking for a new low here. You just got a trap that would probably give you, as volatile as it is, it give you an easy scalp. So that's the thought process behind that one. So I got to think this through a little more tomorrow. I can't go and mark the usual trades the way we normally take them if people are going to use the larger stops and larger targets and stuff, because it may not necessarily work that way. So the main idea was just to show you that it's all still here on the same chart. Okay, I had a slight interruption there, but I think we were talking about that. And then you go higher and you back up. But notice this you got a little double bottom here, and you try to go lower again, and you get those matching lows across there, especially those. See, you could just see it when that line's right there. You can see that. And it breaks below and fails and turns up. I like that for a long, because now you've tried to go lower 1, 2, 3 times. You got that, you got the double test of this area or this area. It's really a triple test of, and notice where it bounces right off the opening, and it's headed north again. And I like this one. This is kind of congestive, but notice it makes this little pullback right here. And then there's a failed second entry short there, but there's too much overlap. So just wait, and when it fails again and then turns up and gives you a nice looking bar right there, I like that one. And you're looking for it to come back up here. And so notice that's where it goes when it finally turns. And so I like that one. And then there's another chance here. There's a little failed. This one's a little more risky because you're really close there, and it may not get up there, but that's a nice bar too. It went lower and then broke out the top. Notice pull back first entry, then it goes lower again. So that's a second entry long, very similar. It's two failed. It's a little double bottom, and you're not quite there. So it doesn't surprise me that it shoots up there again. And so I like that one too. It gives you a little tighter bar, you could actually enter a little earlier here. It scared me with this little doji right here, but it kept going. And then now, and the trend is up, so you're more apt to stay long than anything. And then it's working down. First entry short, the pullback. There's a failed second entry long right there, and everything is coming back up under the EMA and touching it. It's getting under, it's like it went below the midline and came back. So I like that one. Again, it's plenty for a scalp. It doesn't get much more than that. So again, that's one I would probably rethink, being that close to that line right there. And you didn't necessarily know the line was there, but still it's so close to that low. Even if you had this line, originally I had it a little lower, so it looked like it had more room, and that's one reason I liked it. But thinking back about it, actually I tightened that, but at the time I had it right here, and there's not much room. Excuse me. I'm sorry. My throat, when I get to talking, I've had this head cold. I'm not 100% yet. I'm about to get over it, but I get to talking, my throat starts bothering me again. But anyway, there's not much room to scalp out here. But that's a nice bearish bar, but it didn't quite go lower. Notice it's the two matching lows. So looking back on that one, there is a trap there, and it would have gotten your scalp easy. But looking back on that, thinking about it, marking it now, thinking about remembering that this is the 4,000 tick chart. I'm gonna make that one green. I think that's a little bit risky. Even though you had your line down here, it's already touched it once. It went higher. You would expect it to come down here and touch it, but it doesn't. And notice it misses it to the short side, so it overshoots it about the same on this side. And you were better to wait on this entry right here. You got a new low, and it's like a two-legged correction. and you get a entry right there on that big bearish bar. And now you figure it's going to come to the low side of the bar, and you might have thought about moving that up now because there's some reason it bounced there, and you can see that's probably where it was. So you were better off to wait for it to come all the way back to this side, and you almost always are before you enter. And then it moves down, it comes back, and it turns down right there again. And you're not quite down to here. You figure you're going there at a minimum, and it doesn't look very far. That's what's kind of confusing about this. And the first trade I took this morning, um, it didn't look very far, and then I got to thinking, you measure it and you figure out 54 and a quarter down to this line right there, and it's basically 51 and a quarter to get down there, more than 51 and a quarter, so it's over 3 points down there, and that, it barely looks like there'd be enough to scalp out there if you're used to looking at a 2,000 tick chart. So don't get confused on that, because that's really, when I did this chart lesson, if I'd have been thinking about that, I probably wouldn't have marked some of these later in the afternoon that I actually was not trading. It wasn't that big a deal earlier on when I was still trading, but I didn't trade all through the whole day, and I tried to mark most of them because I had room today without having 50 trades on here. And I really wanted to just kind of show this chart to show you that all the same patterns are there. Everything works. So it doesn't matter what size chart you trade. Price action works the same on all of them. You get the same smaller channels and trend lines and the breaks and the retest. It all works the same. And the only difference is you've got to adjust your stops. And if you're going to adjust your stop, you've got to adjust your target somewhat. So I hope that was helpful today. I hope some of you may be not interested in doing this, so you probably wish I'd have shown the 2,000 tick chart. And I have it here, and you can see it. I didn't mark the trades on it. But it's all the same thing. You got to back way out to see the moves. And you can see how this is. Let's just show you right here how this does. Look how hard that is to determine what's going on. There's traps both ways. And this is right around, let me just see what time this is. This will make it real easy. The middle of that's about 9:40. So it's really hard to determine. If you follow the rules, you're looking to make a retest of the high, but look how much further it goes. But you could have gotten whipsawed. It looks like there's a long trap, and then it looks like there's a short trap, but it ends up, and that's what I've been telling you about this stuff, is you got to make sure that you follow the rules more than the traps, because there's a bunch of whipsaw that looks like traps that really aren't. It's just because there's so much indecision, but in the end, the price action is never wrong. It always wins out in most cases. So that was around 9:40. So look what that looks like there. Let's just circle it. Make it lavender. And then let's go to the other chart. Well, if I can get there, here we go. And let's find that 940. I'm thinking that's it. There it is right there. Now look how much better it looks. You don't have all that whipsaw, and you just get a first entry, pull back, and then you get your two moves lower, and then it goes higher. So it kind of, and there's still congestion there, but you see there's your first move down, and then it comes back, and then there's your second move down, and then it reverses, and there's really a second entry long that triggers here, but notice there's only one correction. So I've tried to show that before, is that sometimes you want to see that clear break both ways, unless it's a really strong trend. If it's a really strong trend, I would say you could enter right there if the signal bar looks good. That's not a very nice signal bar. But once you get that clear break lower and then it turns up, then it's okay to go on, because now you've got your failed second entry short that turns into a long, and it goes on higher, and you get your new high there after that break. And you can see you got the same trend line working up that you had on the other one. You get the break and a move to a new high, and then you got one working down the break, move to a new low. So I hope that's helpful. And you can see all that did was just kind of smooth out all that garbage right there and make it real clear when it was time to enter on the other chart. it was real obvious that this was the entry, not right, not any time short or long, but this was the entry to the long side. So I kind of like this chart at this point, and it just kind of smooths it out. How long will you might want to use it? We'll just have to see. When it starts to slow down again, we'll go back to the 2,000 tick chart. But I think I'm going to watch this one tomorrow and try trading it the same way I normally trade. I'll probably go for a little bigger, based on what my stop is, I'll go for a little bigger target, and I'm just going to try it. If you're not comfortable doing that, do it on the simulator, um, because you need to know what you're doing. So don't say, well, um, I want to go do this bigger chart, but Mack says it was okay, and then he goes and does it, and you lose money. I don't want people doing that. So if you're not 100% confident, stay with what you've been doing, or just get on the simulator. Don't go live. In other words, I guess is what I'm trying to tell you. Mack's not trying to tell you to go live doing this unless you're really comfortable. And some people have commented that it's worked for them, so it could work for you as well. And I can see the benefits because just like I showed you right here, it really cleaned that up versus what it looks like on the 2,000 tick chart. That's really nasty looking. And you just almost have to stay out of that unless you want to take a gamble and put your stop down here and hope it doesn't get you. And that's just not work. It's just too hard to trade that way. So anyway, I'm going to wrap it up. We're getting into 40 minutes again today. So this is Matt with PriceActionTradingSystem.com, and we'll see you next time.